And that's in the UK now. So let's get on. Now we're on America here. Let's get our friend from south of the border here, the Uneducated Economist, two-time world champion on the show here.
Hey, what's happening, brother?
Yo, what's up? I'm having video issues on my side, so you probably can't see me. But I could see you perfectly.
I can't see you. Cool.
We could see you. We could see you plain as day here, and you look good. How are you?
I'm doing well, man. Thanks for asking. How about yourself?
You know how it is. You win some, you lose some. It's a playing game. It's playing the game of life, right?
No, that's for sure.
Let me open up your thing really quick here. Let me just do this for you real quick. Let me get to your channel. We need to get you to 10,000 subscribers as soon as possible. There is no ifs, ands, or buts about it.
Thanks,
get
man.
Your channel growing because you're spreading the news, or you're spreading what people need to know. And when you're telling, let me go to my subscription. I lost, I'm going to tell you something. I had I subscribed to 134 people. I'm down to like 60.
Yeah, I noticed that I lost a bunch of the people that I've subscribed to as well. So I have to kind of go through my list and figure out, who it is that I've lost. Very strange. And some people said that I've been unsubscribed from their list as well. So
yeah,
it looks like they did a purge of some sort of, over the last few days.
I'm not sure what they're doing. Here it is. Uneducated Economist, street level thoughts, opinions, analysis, and perspectives from the working class point of view. You let me know. Here it is, guys. And I'm going to leave you guys a link to his channel here. Here it is, guys. Get over there. Very transparent. And I was talking about you earlier to someone at my shop that watches your channel.
Oh, right on.
And then they saw me talking to you one time, and they watch your channel, and they live in my town, and they were saying that, and I was telling them, you know why I like this guy, like I really like this guy a lot, is because he's really transparent. He's real. You're very, like, you're not hiding anything. You're just very transparent, and that's very hard to find in real life, let alone on YouTube.
Yeah, well, I started this channel so I could learn. I started this channel so I could learn more about the economy, teach, what I've learned to other people who are interested, and it just started growing. And really, I think it was the audience that grew the channel. They guided me, on where to go and what to look at. I mean, if it wasn't for the viewers of my channel, then I would never be where I'm at today.
Being humble and true is the biggest point.
Yeah,
Yeah, being humble and true, I think, in my opinion, is the most important thing, right?
Well, yeah, absolutely. I mean, I'm trying to be honest. Mm-hmm. I'm trying to be straightforward, and I'm trying to be, as clear as I can with people. I'm not trying to sell anything. Mm-hmm. I'm not asking them to buy anything. I'm not, I'm here to learn. I mean, my only goal here is to try and educate myself and try and get other people around who want to be educated as well to try and learn with me. Mm-hmm. I mean, that's my goal. That's my whole goal, and I really don't have any other thing intended. It's nice to get some ad revenue every once in a while from Google. And
set up a Patreon account for creators.
What's that?
Patreon.
Yeah, people have suggested,
just do
doing
Patreon. You get 1,000 of your subscribers to donate $1 a month, and it helps you upgrade your gear, pay your internet bill, and help you service the costs of operating.
Yeah, and I've had a few viewers request that I do a Patreon, and so yeah, I probably should. I really should expand into other avenues. Mm-hmm. At least to even spread the message. If it helps to do that, that's really would be my only intent on it. I mean, making a few dollars is great, and it is a bit of an incentive to try and keep going. To try and keep the videos going and flowing. Because you do get that the few dollars in every month for it, and it is a nice reward.
Yeah. Good. Okay, so I had your channel up here real quick, and I was going to go over a couple of your videos that you just posted recently here, but I want to pick your brain a bit. I know you're in Oregon, and you're in the logging industry. Or you were
I'm not personally in the logging industry. I'm more in the building supply industry.
Yeah.
but my whole community, I mean, I grew up in the industry. I mean,
It's
fishing, logging, that's our money here.
you could probably name five people in less than a minute that live or that have lived in a logging camp.
Yeah, well, pretty close to it, you know.
Okay, so the average American living in the Midwest, or they couldn't do that, but you can. Okay, so fears of slowdown in the U.S. housing market are mounting, and Home Depot just slashed 2020 sales outlook. Why is retail, especially retail to renovate and fix your homes, already predicting a loss for 2020?
Yeah. Well, you know, I mean, it's all in perspective, right? I mean, people know that when the boom was coming and those houses were flipping and, you know, increasing in price every single month. I mean, I couldn't even tell you how fast they were growing. It was easy, you know, you could take out a credit card, buy a house, renovate that house, and in 6 months you would be, you know, profit and money and everybody would be rolling in it. Well, now you can't do that. You know, you buy a house and you fix it up and you hopefully can sell it for what you paid for it and put into it. So the idea that you're able to flip a house is just like, you know, not there. It's not like it was, you know, when you go into the few years back. So yeah, it makes sense that Home Depot is slowing down as far as the renovations go. They just don't have people wanting to flip houses like they were.
But they're even projecting it. They're already shooting themselves down before they even enter the first quarter of 2020. That's some bad projections. Who's their regional manager? Like, come on.
Yeah. Well, I mean, I guess it's. I mean, I couldn't tell you what their motivations are for coming out and saying it in such manners. But I mean, if it's their projections, that's what they're expecting.
I do have respect for that because they do have shareholders, and I respect that too.
Yeah, I mean, you know, really, would you want a shareholder to be understanding, you know, of the situation, or would you want them to be surprised later down the road? So, I mean, I really, like I said, I couldn't tell you what their motivations are, but yeah, I would think that at least being somewhat honest with your shareholders could at least keep them, you know, maybe in the game through the rough time, you know.
Mm-hmm. U.S. housing market expected to be sluggish in 2020. What do you think? First and second quarter of Q20 of first and second quarter of 2020.
Yeah, you know, it's gonna be an interesting time. Now, I don't know if you've caught in the last video that I put out, not the last one, but the one talking about the shadow currency of the world. I have been on this trying to do some research as far as the shadow banking system and what's going on, because really I am looking at the shadow banking system, and it is well, for one, it's incredibly complex, and it's really hard to wrap your mind around the whole. Not even the whole thing, just even trying to try and understand what the picture looks like, let alone what the implications are going to be for the rest of the economy out there. And if anything like we experienced before the repo, where there was the drawdown in liquidity from the banks due to whatever tax payments or whatever it is that they had for an excuse, well, apparently that's going to be coming again here at the end of the month. And when that takes place, we're going to have to see the Federal Reserve stepping up with that repo market even more. So I have no idea what is going to be taking place here come, you know, the end of this month and into the next year, because this repo market is this, like, you know, it was supposed to be a temporary fix and has now become a permanent normal thing.
Right.
And it's really kind of hard to explain the shadow banking system, but in especially, you know, just in a simple, you know, couple of minutes. But basically, the easiest way that I can kind of describe it is that when countries do business around the world, right, when you have the world reserve currency being the dollar, when two countries want to do a deal with each other, they do it in U.S. dollars, and generally it's done at the Federal Reserve with an account transfer. Okay, so that's a pretty simple understanding of the system. The shadow
like buying
banking
oil.
system,
When a country wants to buy oil, it needs to purchase U.S. dollars, and that's why they call it the petrodollar. Continue.
Exactly. And so now there's countries who don't want to deal with the regulatory authority of the Federal Reserve and, you know, basically not able to do the deal or having to deal with the regulatory authority of the Fed. So they do it outside of the Federal Reserve and outside of the current dollar regulated system. And they do And really, the best person to explain this is a guy, Jeff Snyder. And if you just YouTube his name, you'll find it right away. But he explains it as far as euro dollars go. And the best way that I can explain it is that contracts are written in US dollars and then used as if they're US dollars. And this is like a shadow banking currency system that is spread all across the world. Nobody knows how big or how vast it goes. And every once in a while, there is a drawdown in these things where people want to basically get paid and they're liquidating them. And the Federal Reserve has no idea how much of their liabilities, their cash they need in order to cover this shadow banking system.
Hold on.
And back in 2007, 2008, where we saw like the subprime mortgages starting to collapse and all, well, apparently it was due from this shadow banking drawdown in the currencies. And this is what actually kicked off the subprime mortgages here in the United States. Now, the Federal Reserve, since they're not keeping an eye on the shadow banking, the shadow currency, or anything else going on out there, they could only describe it as the subprime mortgages here in the United States because that's what they could see.
So hold on. I wanted to jump in there real quick. I said this, and I said this like maybe 5 weeks ago. Risk varies depending on the capital asset being analyzed. And then you said exactly what that means. And what does that mean? Is basically they're not sure what the heck there could be over leveraging on something that's realistically doesn't have the flexibility in it, I guess.
It just doesn't. Well, you got to think about it. How liquid is a market? How easy are you able to get in and out of that thing? Like gold and silver to me is a very liquid market. I know plenty of people who will buy gold and silver. So for me, gold and silver is a very liquid market. Now, having a fine painting, you would have to go find a buyer for that. That's not a very liquid market, not from my sense. Now, if I was a art dealer, that might be a different story. So now when you're out there dealing with like bonds and investments of like mortgage-backed securities and asset-backed securities, you have to find a buyer for those. Right? Now, on the run-up, when those things are going up in price every single month, it's easy. It's a very liquid market. Everybody's playing the game. But when the market turns and it becomes a seller's market or it becomes into a selling time in the market, there's nobody buying.
Right.
All of a sudden, liquidity is gone. Right. There is nobody, and the prices start dropping until they find somebody who is willing to give up their money.
And this is why we're seeing repo strains.
Right. Exactly.
We're seeing the repo strains right now because it's unavoidable. It's unavoidable because banks need to see some sort of, what you might call it, flexibility in their balance sheets. But they're not. So
right. Essentially, they're essentially overloaded with assets. They're overloaded with treasuries is basically what it's come down to. And they don't have enough cash in the system to keep the system functioning and rolling. And so that's where the Federal Reserve steps in with the overnight repo, where they actually pulling those treasuries away from the banks and filling them up with cash so that they have enough liquid cash inside of the system to keep rolling. They have to do this every single night.
But what happens when the risk isn't properly, how do you say, assessed? And who's analyzing these risks? Who is... Like, is there an appraiser going in and saying, okay, these are only worth this, and this is worth this? Who's taking this into... Nobody, right?
Well, in the banking system, you got something. You got people who, evaluate you got like people who are grading like your bonds. You got, Moody's and different people who are keeping that kind of rate. In the shadow banking system, there's nobody. There ain't nothing.
That's a huge concern.
So nobody knows what or how much or how the risk is all on your own perception.
So what you're saying is they don't know if they're tricking or treating.
They don't know anything. They don't know if they're tricking or treating. And really, I wish I had done a little bit more research. Really, if you give me about a week on this, I'm going to really know some stuff because I'm hitting as much as I can. I'm reading as much as I can on this. Because really, this is something that I don't think a whole lot of people are really talking about, because after this, everything else is a symptom of it. I mean, that's really what it is.
So are you talking about the reverberation within other financial, it's good. Do you think it's going to reverberate into, let's say, other sectors of the market that have at one point had nothing to do with each other, but now they will?
Well, ultimately what I see happening off of this is that just like any cycle, you're going to start seeing the churn. And when you see the churn in this stuff, there's going to be a drawdown in cash, and cash is going to start flowing out of the system, and you're going to have to see the Federal Reserve act. This is the reason why I feel that Trump is so adamant about the Federal Reserve dropping interest rates and going into as much printing of money as they can do, is to try and come up with the amount of liquidity that the shadow banking system is going to be demanding here when the cycle begins to churn. And, you can already see a kind of a test of it. When the Federal Reserve was tightening up their monetary supply, they were basically wanting to see how much of the world was demanding their liabilities. And they found it right away. And then it wasn't but just a few months later, they were in trouble with the amount of liabilities that they had into the system and realized that they just don't have enough at all. And so now, like I said, they're taking this repo, which was just really ultimately the overnight repo was supposed to just tweak it just enough, to try to kind of handle the little bit of imbalances in the banking system. Now it's a full-on tool. It's what they use. And what I honestly see is that if this system changes, you're going to have to see a deficit spending coming out of the United States unlike anything that they have ever done before in order to create the amount of bonds and stuff for the Federal Reserve to print and buy. Does that make sense? So that the liquidity.
You're robbing Peter to pay Paul. In the end, it's just a vicious circle. The circle of infinity cycle credit destruction is what it's going to ultimately be.
So, what you might end up seeing before all this kind of takes place is that you might see a huge drawdown in these dollars. There's going to be a crash of the system. Everybody's going to be, freaking out trying to figure out how they're going to pay their debts. And then once everything kind of goes bankrupt, then they'll just, start filling it up again. And then all the rich elite will buy up everything under the sun.
Guys, we got Uneducated Economist on the trends in the housing market tonight, giving us an update. Let me put the link there. I'm going to be restreaming this on 11 different platforms for the next 24 hours, guys. So This is Uneducated Economist. You could find him on YouTube. Also, if you're listening, if you're on the I-10 truckers, a lot of them listen to this on replay. Don't forget to check out, because you're listening, you're not watching, don't forget to get onto Uneducated Economist and listen to a lot of his stuff. He's really good. So now let's step away from the campfire, because these horror stories are pretty scary. This is pretty scary stuff. You know what I'm saying? Because take a step from the. I want to ask you Q1 and Q. Okay, do you see them? You were saying that it's a big tug of war right now, with them Trump trying to force them to lower rates, right? To give obviously more lending power to obviously the population. Right? Allowing people to borrow more, right? And get them approved for bigger allowance or more borrowing power, right?
Ultimately more credit into the system, more people can spend money, and then
kind of stimulate the economy. Okay, now let me ask you, how is, in your neck of the woods where you're at in Oregon there, how do you see consumer confidence? Do you think Christmas is going to save America this year?
Yeah, Christmas saving America. I don't know. To be honest with you, I work in a retail business, so every winter, especially in my business, you see a slowdown taking place. But to me, it does seem like it's a bit slower than it has been over the previous years. Now, honestly, I also, work in the building industry. And so I see a lot of homes that are going out, and I see a lot of people who are optimistic about building this year. So it's really kind of I kind of see both things kind of happening. I don't see a lot of people doing the retail, coming in for the smaller odds and ends and maybe, picking up gift cards or power tools, stuff like that. But I do see a lot of lumber still kind of flowing through the yard. So, like I said, I kind of see it both ways. It seems like, maybe people who have had projects in the work for the last year are going through with those projects, and not a whole lot of stuff is starting new. I guess that's kind of the way I kind of see it, maybe.
Okay. Let me ask you, outside of the repo market and outside of them lowering rates, is there any other tools left in the banking cartel's toolkit to fix this problem, or are we going to be forever? Is there anything else they could do, in your opinion? You don't have to be 100%, but in your opinion.
Well, Well, no, I mean, there's no fixing this. There's like no, like, there is no fix. Like, it's not a matter of like fixing the thing, because fixing it means like what?
Patching, patching, patching,
You go
patching it
back
up.
to a gold standard. Yeah. And then again, like, what is it you're patching? Like, I mean, you kind of have like a bad deal, and then you got a good deal, and you got a like not so good deal. To me, like, it's not a matter of patching up a system, because you're never going to have a system which is going to be running like, 50 years, every year being a year. It just doesn't work like that.
Mm-hmm.
It's cyclical. So you're going to have good and bad. And then you have to be able to work through those things. You have to be able to, like, understand that you are going to be going through this cycle. One of the greatest people that I like to talk to is an old man at work, and he's like in his 80s, and he really understands like the cycles of things. He walks around and he says, yeah, housing is expensive right now. Give it some time. You're going to find the prices come down. And I ask him, why do you see this? He says, because that's the way it always happens. You just have to live long enough to experience it.
Right, but here's the problem. Here's the problem, and I brought it up quite a few times, is look at the repo market. The repo market came right out of left field.
Right.
That came right out of left field. I didn't expect that.
Well, yeah, and I actually did a video talking about the repo market about 4 months before the repo market became noticed, right? The only problem is that during that time, we were in quantitative tightening, and I thought that it was all about the reverse repo market, not the overnight repo market. So basically, it was about drawing their liabilities back into the Federal Reserve, not about getting their liabilities back out to the bank. And so I saw it at the time. I just didn't recognize what was happening because of the fact that we were in quantitative tightening at the time. We weren't in quantitative easing. So I was looking at the reverse repo, the overnight reverse repo rate, as opposed to the overnight repo rate.
Right.
Anyway, there's two, because you basically understand there's two things that are happening there. You got one system that injects money into the system, and the other system is taking money out of the system. And I was paying attention to the one that was taking the money out, because that's what was happening at the time.
Right.
And then when the whole quantitative tightening ended and they went into stagnation, basically, where it was this stopped raising interest rates, in stagnation, but they went into stop raising rates. I kind of forgot about the repo market because it wasn't a big deal at that point, and then, here it was a few months later and it kicked in again. And I'm like, look at that.
You see? But it came out of left field, right? So your friend.
It really did,
So you go back to Business 101, we expect these cycles to just leave. We leave the markets on autopilot, and we expect these cycles to continue to flow just as they have in the last couple of hundred years. But our problem is, here in Canada, I'll give you an example, first-time home buyers loans. You can't afford your house, we'll give you another loan to take another loan out. So zero interest-only mortgages, 0% down mortgages, 100% loan-to-value, sign right here. We never had this stuff. And now it's all coming out of left field. And a lot of even some of the best economists on the planet don't know with the smoke and mirrors what's behind the curtain next. That's why I'm asking. That's why I wholeheartedly asked you, what do you think? Outside of the repo market and outside of lowering rates, what other tools do you think are going to come out magically?
I have no idea. I mean, to be honest with you, I have no idea, other than, because really the Federal Reserve, their whole concept is to print money and buy something, right? They usually buy mortgages or mortgage-backed securities, or Treasury bonds. This is like the two main things that they buy. But they're not limited to that. They could buy stocks, they could buy foreign stocks, they could buy foreign bonds, they could buy all kinds of stuff. They can just sit there and buy up the world with their printed money. At some point, where do they lose the confidence in their system? Right. Now that would be, ultimately what it is, because really they want the demand for their liabilities. They want people to want the dollar. And if they just go willy-nilly printing and buying things, you're going to lose the competency in the dollar. They basically self-destruct themselves. So what is it they're going to do? I don't know. I mean, they need to supply the world with liabilities, their liabilities, cash.
Right.
And, whether the demand for it exceeds their capabilities of doing it, or if somebody draws so many of them that they can't print, we're going to end up with one of two scenarios, inflation or deflation. And, the way I kind of see it is that it's going to be a major one of the two.
Let me ask you a very dangerous question now. We're treading back to the campfire to a ghost story.
Oh, boy.
Here goes. Do you see the United States of America headed towards negative rates at any time? Because in Canada, we're already going. Australia's going. New Zealand's looking at it. The UK is looking at negative rates. Everyone's looking at going into negative territory right now because the toolbox is out of tools. There's no more, I guess, financial tools or financial systems they could put in place. So do you see them going into negative territory? I know you don't have to be right about it. I just want to know what you feel.
Well, I mean, I'm the first one to tell you that nobody can predict the future anyway. So I guess what it comes down to is that I would have to look at it two ways, is that who's going to end up buying the treasuries enough to drive the interest rates below zero? Okay, because that's ultimately what you have to ask. Is it going to be the world buying it, or is it going to be the Federal Reserve buying it? Because somebody has to buy up enough of those treasuries in order to drive the interest rates down. The more you buy, the lower the interest rate goes. As soon as you don't have a buyer for them, then the interest rates start to rise. So that's what it comes down to. Does the Federal Reserve end up printing up the money and buying treasuries? Is that their ultimate goal, is to give the United States the ability to continue to go deeper into debt? By doing this, they're basically enabling the self-destruction of the United States under, collapsing under its own debt. And in turn, that means they collapse themselves. So, is that a likely scenario that, a bank would want to self-destruct themselves? And I mean, a lot of people might say, well, they don't have any choice, or they don't care, or they're going to, whatever. Okay, that might be the case. I try to think like, okay, if I was a business, if I was a man trying to run a business, would I want my business to self-destruct? No. And I mean, is there times in there that you have to say, okay, we're coming into some hard times. I have to sell off some new equipment, or I have to do, some changes to my business that's going to hurt. I have to lay people off. That's usually the good business decision that's made. And that's what ends up being the cycle that goes into it. So are we going into negative interest rates? Yeah, probably at some point, we'll probably go into negative interest rates. Is it on purpose? I doubt that. I doubt it would be done on purpose.
Right. That was a good follow-up to the question. That was good. That was really good. So I got your videos open here to the left here. We got wood, Shadow World currency, guys. Don't forget to check out that video. Guys, would you invest in lumber video? Don't laugh, it's paid for. And I actually want to say congratulations, because you are debt-free.
I am. I'm finally did it, bro. You remember the very first conversation we ever had, I was telling you how I was trying to be paying off my debts, and I did it, man. I finally did it. I couldn't believe it. And I tell you, man, the world feels different, It
does.
I mean, I look at the world a little differently now. I mean, I carry myself a little differently. I think about things just a little differently than I used to. And living a debt-free life, I wish it upon everybody.
Yeah, it's really good. Disposable income, you just feel like you're more in charge of your own life.
Yeah. I really do. When I think about it, it's like, I feel like actually in a really good position. I don't have a whole lot of things that are tying me down. I don't have real estate. I don't have like a lot of investments that I'm worried about and stuff. I'm really in a pretty good spot considering, I don't have much, but then I really don't have much to lose. You know what I'm saying? Mm-hmm. So yeah, I feel great, man. I'm not worried about things. I'm feeling good, man.
I'm very, very proud and happy for you. Okay. He's got, new shipping channels open, drowning in the sea of green, 1 billion square feet will disappear from production. Yeah. China deal, what deal? My opinion on my whole thing on that is Trump is just playing Ring Around the Rosie, and that's it with the whole China deal thing.
I agree. I think it's more about. I think it's more about the credible threats that come with it. He can really change the perception of where the markets are going just by tweeting, good or bad stuff about the China deal. So yeah, to be honest with you, I don't even listen to it anymore. I don't read the articles on it. I don't care. I don't. It's just like until an actual deal comes down, then I'll read about the deal. But until then, I don't care about whether or not it's happening or not, because it doesn't matter.
It's kind of like your guy's president is now on impeachment number 433.
Yeah. That's another thing. That's a big distraction. It's really, not saying like if it's. if there's just cause for it, then cool. I mean, I'm totally down for it. But the problem is that it's occupying so many people's mind and attention when there's so many more better things that they should be focusing their attention on. Anyway, I mean, at least that's my opinion on it. And you know, there's plenty. Like I said, if there's justice that needs to be done, then I'm glad to see that somebody's at least stepping up to try and attempt to make that happen. But like I said, for most of us, you know, there's other things that we should be paying attention to, you know, at least in my opinion. You know?
Right. No, you're right. You're 1,000,000%. You're 1,000,000% on the ball with that. Any last words?
No, actually, I really enjoyed the conversation, man. It gave me a chance to talk a little bit about that currency, because I haven't really had a whole lot of chance to talk about that yet. So I appreciate you letting me, you know, kind of voice my opinions on that.
No, I appreciate you coming on and taking the time to come on.
No, thank you, man. You know, and I really have to thank you. You're like the one who gave me like my first shout out, man. You're the one who really got my channel up and moving and rolling, and you know, I kind of owe you a lot for that.
No, I don't think it's me. I think it's you for actually putting out content that matters.
Well, I appreciate it, but I remember that first video you put out where you're like, "Hey, man, I really like this guy. You got to go check him out." And I was blown away. I was like, "Holy moly, somebody actually noticed me." You know, it's like, wow. And really, my channel's been growing steady ever since. So no, it was you, bro. It was you. You're the one who kicked the ball rolling, man. I appreciate it.
Well, now that you're debt free, now next, if we meet, you're buying beers, right?
Yeah, I'll buy you beers. I don't drink, but I'll buy you as many beers as you want, man.
I'm not a big drinker. I'm just kidding. But yeah, okay. Yeah. Okay.
Yeah, you bet, man. I mean, it's been great living debt free, man. It's just like all of a sudden I don't stress anymore, man. It's like, you know, I got the bills up there. I can't wait to pay them. You know, it's
good. Yeah. It's so good to be free.
It is.
Well, anyways, thanks for coming on. If you ever want to come on, Mike in the Night this Saturday is 2020 predictions. So we're gonna do 2020 predictions on Mike in the Night, where I did it last year at this time. Where people are just calling in and just telling us their 2020 predictions of what they think things are going to be headed. So let me know if you want to come on and throw out your prediction there. And
interesting. That's Saturday. You're doing that?
This Saturday, Mike in the Night, 9 p.m. our time. You're in Oregon, so it's 9 p.m. our time.
Sweet. Yeah.
And that's 2 p.m. Australia time. The next day.
Right on, man. Yeah. Cool. I'll give you a Skype message and let you know, man.
All right. You take care now. Stay strong, and we'll be seeing you soon. Okay.
All right. Thanks, brother.
Thanks.
Bye.
That is our man, Uneducated Economist. And I'm going to put a link again for his YouTube channel. I need you guys to go on there and check him out. I like this guy a lot. He's I don't know. When I first saw his videos, I wish I could go into business with this guy. You know what I'm saying?